we have a guidance for 2022. The revenue guidance for the company is around 500 million. What's good, YouTube? Ovidiu here. Welcome to Stockbites number 3. Today I'm going to have a look at one of the most interesting industries, the one of advertising, and more precisely digital advertising. I'm going to do an in-depth analysis of one of the fastest growing companies in the industry, and in the end I'm going to share with you what I think would be a good price if you want to open a position. Alright, let's get straight into it. Alright guys, so I'm gonna be describing the advertising company called Magnite. It trades under ticker symbol MGNI on the New York Stock Exchange, and right now it trades at around $23. The company is one of the biggest players on the sell side of digital advertising. It is actually the biggest independent player on the sell side. It was born in 2019 after the Rubicon project and Telaria merged. They were one of the leading provider of CTV and an advertising technology company. So it is very technology focused company, and it offers a platform that features applications and services for digital advertising inventory sellers, which are called publishers. Basically all the websites, mobile applications and other digital property, media properties that want to sell their ad space, they're using this company in order to facilitate the process. We provide software that enables publishers across all media, including CTV, video, audio, and display, to maximize revenue via programmatic trading. And I'm going to describe the industry in just a moment. I'm going to start with the investment thesis, which are 3 points where I think the company is a good investment or might be a good investment for a portfolio. It all depends on your desired level of risk. First of all, the shift from linear TV to programmatic ads is happening. Magnite expects CTV, which is connected TV, to become its biggest growth driver in the future, and right now around 80% of the households in the US have CTV, and cord cutting intensifies. By 2024, the non-paying TV households are expected to surpass the ones that are paying for cable. The second one, CTV independent leader with a strong focus on expanding globally. After the Telaria merger, Magnite has taken this role of the biggest independent player in the sell side. The third one is a supply path optimization, which is basically a consolidation, working for the advertisers. They're going to start working with fewer partners and they're going to have a stronger relationship. So on the sell side, it is very important that Magnite will solidify those relationship with the advertisers and with the buy side. Alright, and now a very important aspect is the industry, and I'm gonna start describing the industry a little bit, because it is a crucial step in understanding what Magnite does and why it might provide value for the investors. So nowadays, both advertising and advertising buyers and sellers are demanding more transparency and better control in order to make better decisions and to have more insightful facts about their planning and their actions of buying and selling. So in the process of buying and selling advertising, there are two parties involved, the publishers and the advertisers. The publishers are all the websites that want to offer their space, and the advertisers are all the brands or media agencies that want to buy that ad space. And in the process, there are three tools used to orchestrate the online display advertising market. We have on one side the ad server. So we have here two photos. So I'm going to start with this one. We have here on the side the biggest publishers, for instance the Fox News or Spotify. Spotify would be a good example. And we have here all the brands, all the advertisers that want to buy publishing space. And so we have what publishers use is an ad server. It acts as a publisher's inventory management system and helps the publisher sell its inventory. Alright, so we have the ad server that works for publisher in order to help him better manage its inventory, and then we have the same thing. We have an ad server here on the side of the buyer, and those ad servers are connected to an exchange. So it's an exchange which also can be where the sell side platforms and the demand side platforms come in. So they fill in the role for an exchange where the sell side, the part that want to sell its advertising, meets the demand side, the party that want to acquire some advertising space. And so we have here a simplified version. So we have advertisers that want to buy advertising. They have their own advertising server, which is around here. And then we have the platforms for ad tech, which are the demand side platform, supply side platform, ad exchange, ad network, etc. So we have the ad server that acts for publishers. We have the marketplaces that match buyers and sellers. And we have the ad buying tools that advertisers must use as the middleman to buy display inventory. Basically, we have here, into the same space, we have here the DSP and the SSP. So basically we have here the supply side platform and the demand side platform. They're basically taking the role of this exchange. Alright, and I'm going to start with the ad server. Largest publishers such as Times, ESPN, CBS, they depend on a sophisticated inventory management because they have a lot of ad impressions. They have a huge number of impressions monthly. And so they need a software solution that can manage that inventory easier for them. And additionally, serving two main functions: identifying the users visiting the site and connecting with multiple marketplaces, or for instance here ad exchanges, to help publishers sell their inventory and maximize their revenue basically. This is a very unique market because during the last couple of years Google has completely dominated the space. And as of now, it completely controls the publisher ad server market for display. It has its Google Ad Manager that controls around 90% of the market in the United States, which is basically almost all the market. Secondly, we have the ad exchanges for big publishers, and we have ad networks. Those ad networks do exactly the same thing, only for smaller publishers, so smaller companies. One thing to know about Magnite, it only works with big clients, so I think the clients must have at least 5 million impressions monthly, so at least 5 unique visits on their websites. And ad exchange for display are real-time auction marketplaces that match multiple buyers and multiple sellers on an impression by impression basis. SSPs, which is the sell-side platform, that's exactly what Magnite is, are also referred to as ad exchanges. Although SSPs and ad exchanges were developed separately in the programmatic ecosystem, nowadays they're basically almost the same entity. Google owns and operates the largest display advertising exchange in the United States. So besides owning Google Ads Manager, which is the biggest ad server, Google also owns the biggest exchange, and you'll be surprised to find out that Google also has one of the biggest influences in the buying space. So the conclusion here is that Google is very strong in this space and across the whole supply chain, and has a very, very dominant position. By controlling publishers' inventory through its ad server and simultaneously operating the largest advertising exchange, Google has inherent conflict of interest between publishers' best interest and its own. That's what happens when a company has grown so much that it accommodated the whole system, the whole supply chain. And we have thirdly the ad buying tools for large and small advertisers. Those are called DSP from the demand side platform. So basically that's the other part of the coin. So we have sell side and buy side, and those two meet. We can conclude that Google holds a strong position at each stage of the intermediation chain. As a result, advertisers and publishers may face a lack of transparency over aspects like quality and effectiveness of advertising. And yeah, we see here another photo. So we have the same thing: ad server, sell side platform, demand side platform, and the ad server for the buy side. This is the ad server for the publishers. Okay, the solution for the major position that Google had in the market is the adoption of independent advertising platforms. And during the recent years, there have been a lot of processes that have made this easier. One of them is the real-time bidding process. So what this means is each time website is open, there's going to start a real-time bidding process. The publisher is going to send the available impressions to the exchange, and then the exchange is going to have a bid request from the buyer to sit in an exchange and act as a middleman for the advertiser. And after the set time, each exchange closes its auctions and chooses a winner. The publisher's ad server then selects the winning advertisement associated with the highest exchange. So whoever bids the most gets the impression. And we have here the process. It's called header bidding process. And there were two ways in which the real-time bidding was done. First of all, we had the old method, the waterfall method, and we have here exemplified very well. The first method, so for instance, the publisher wanted $2 per impression. If the first partner would offer $2.20, that's it. But now the header auction has made it much more easier for multiple DSPs to bid for the same publishing space. So this header bidding process has really opened the market for more players and for more exchanges and for more independent advertising companies. Alright, although it had many benefits for companies, it was also very, very difficult to manage this process, and so Magnite, that was Rubicon at the time, together with some other industry peers, have come with an idea of an open source community where each company could share any developments they made for this process, and this was created as prebid.org. It is an independent organization that aims to promote fair, transparent and efficient header bidding, and it's an open source that can be used by all the companies. It came as a solution to the domination from Google. A quick, really quick characterization of the market. We have basically two forms. We have the OTT over the top, which refers to video content streamed on the internet instead of accessed via traditional cable. And then we have the CTV, which is connected TV. It refers to viewing of digital content on internet connected television, including through standalone streaming devices, gaming consoles, and so on. And it has multiple benefits like superior targeting, measurable results, and a growing audience. And we have here some of the best providers for CTV. We have Roku, Apple TV, Fire Stick, that's from Amazon. So those smart TVs are now a major part of the advertising industry. And we have here Skim for the CTV. It has smart TVs, streaming devices like Roku, Fire Stick, and Chromecast, game consoles. And we have here on OTT everything that's non-CTV. We have desktop and mobile. Alright, next we have the convergence of TV and digital. That would be the connected TV. That's where the connected TV would take over in the future. And we have here the market growing for the CTV. There are a ton of people in the US, especially where the CTV has really been adopted. Going forward, we have the private marketplace and the open marketplace. In a sense, what this differentiation is, it's that publishers can sell can sell a big part of their advertising space via a private marketplace, which is via direct relationships that they have with advertisers, and so it doesn't have to go to the open marketplace. And this private marketplace seems to be very important in the CTV area. As we can see here, we have a statement from the Magnite CEO. The content producers are way too protective of their inventory and the consumer experience to have an ad that runs that does not fit with the programming or the vibe of the programming. We do not advocate an open world. It's all going to be private marketplace deals. We have supply path optimization, and as a reaction to the surging number of intermediaries, the process of supply path optimization was born. It refers to efforts by buyers to consolidate the number of vendors with which they work to find the most effective and cost-efficient paths to procure media. So those demand-side platforms, the advertisers are going to start and they're going to try and buy inventory from the more established partners, the ones that they can trust, and it relates very much with the private marketplace. Alright, that's where we introduce the company Magnite. We're Magnite, your global alternative to ad techs, walled gardens, and the giants who live there. We believe in keeping technology transparent, solutions collaborative, and guidance unconflicted. Crazy, right? So from the get-go, we can see what their motto is. They are trying to take on the big guys from the industry, as we've seen. Google and also Facebook have major influence. In April 2020, Talaria and Rubicon project merged. They became the largest independent sell-side platform, and Magnite runs two distinct platforms right now: Magnite CTV, which is specifically optimized for CTV, and Magnite DV+, where DV+ stands from display, video, and other formats for advertising. And we see here a quick scheme from Magnite. We have the ad server, the publisher ad server. We have the programmatic decisions, that are also made by the ad server. And we have the exchange, that's where Magnite comes in. And on the demand side platforms, that's where Magnite has most of the relationship. It says it has over 150 integrations with the demand side platforms, and they seem to be working very well. Okay, so for the ad server, that's the SpringServe. It's a company that Magnite just acquired for 31 million. We have the demand manager. Magnite acts as an omni-channel with important roles in the programmatic decisioning using its proprietary tool called demand manager. It has been created using Prebid's open source software, and it is integrated with Magnite's exchange and supports open auction or private deals for the publishers. It is effectively sourced by utilizing first-party data from publishers, because as you probably heard, Chrome, Google wants to eliminate third-party cookies, and the same for IDFA on Apple, for the Apple side, and this is going to have an impact on the industry. But more precisely, Magnite believes that of the proposed alternatives, the vast majority lean heavily on the first-party identifiers implemented by publishers, not buyers. So instead of the advertising companies now having data for the customers, for all the visitors, now that's going to switch over to the publisher side. We have following sellers and buyers tools that Magnite use to empower sellers to better monetize their ad space and buyers to efficiently target their desired audience. How Magnite makes money? It makes money by purchasing and sale of the digital advertising inventory through its platform. It takes rates that tend to be lower for PMP transactions compared to open auctions, and the same thing, its rates are lower for CTV. It also generates revenue from the fee it charges clients for use of demand manager, header bidding, product, and SpringServe ad. As you can see here, Magnite is counting on more and more reserve auctions to be held in the CTV space. So we have two things here. First of all, the CTV space is gonna grow tremendously, and then the reserve auctions are gonna become the norm in the industry. That's where SpotX acquisition comes in. Magnite has recently bought one of the leading experts, a CTV focused company like SpotX, in order to inorganically grow its reach into CTV and basically just double down on the CTV growth. And yeah, it paid around 1.17 billion in 2020, around 10 price to sales, which is a decent valuation. We have here Magnite's position as an independent leader, and here's a list of some of the most popular SSPs from a survey realized by Statista in 2020. We can see here Rubicon, SpotX, and Telaria. They're now the same company, so they have grown into the same company, which is encouraging. Still, I need to emphasize that Magnite has used debt as a way of acquiring SpotX, and they have acquired around 750 million in a short time span. Alright, in terms of the management team, it has a seasoned team with the CEO leading from 2017. Risks, those are very important. It may have integration difficulties, as it is with any merger. Those might appear, especially since the company has made a big amount of mergers in a short period of time. It has a high amount of debt, and it is in intense competition in a fragmented market. There are a significant number of big players like Google, Facebook, or Comcast that have the resources to impact the landscape in a major way. And the CEO actually made it clear that that's who Magnite is coming for. The vast majority of revenue dominating in this space right now is by FreeWheel, owned by Comcast and Google, and that's what we're going for. Alright, in terms of financials, we see here revenue and gross margin, and also adjusted EBITDA. This is for the first 9 months of 2021. As we can see, the revenue grew significantly to 307 million. And unfortunately the gross margin wasn't that great, but adjusted EBITDA had a good 26% rate, with a target for Magnite for 2021 between 30 and 35. Alright, we see here revenue per channel in 2020, only 15% for CTV, in 2021 38%, so yeah, significant growth. And we see here the revenue growth rate for the company, 506% for 2021, for the first 9 months of 2021. And in terms of geographic span, around 70% comes from the United States, 30% is from international traffic. And moreover, we have a guidance for 2022 the revenue guidance for the company is around 500 million. Alright, the COVID-19 impact in Q3 and Q4 of 2021, the management made clear that it's going to have an impact more precisely in the auto sector. So one of the largest regional advertisers are the big rooftop car dealerships that enjoy CTV immensely. However, the sector is seriously affected by the supply chain issues, and hence they have a much smaller advertising inventory to sell. Right, in terms of cash flow, the company has had negative cash flow operations in 2020, but this has been resolved in 2021. For the first 9 months, the company has had 58 million in free cash flow from operating activities. When we take into account investing activities, financing activities, those two are gonna take it on a negative. I mean, the investing activity part is gonna take it on negative, but I don't want for the company right now to have positive cash flow because it is still growing, it is still investing heavily, and so yeah, that's what happens for a high growth company. In terms of valuation and technical, as you can see here, the competition is very intense in this space, and besides the big established player, we have some small sell-side platforms that are expecting significant growth in the future. Two examples are Programmatic and Perion. And so I've compiled this scatter plot to see how those companies compare. And as you can see here, we have Magnite. It has a almost 43% revenue compounded annual growth rate for 2020 to 2023, so for the next 3 years. As you can see, Programmatic has also around 32%, and I've compared this with the next 12 months enterprise value divided by revenue, and as you can see here, both Programmatic and Magnite trade around 7, which is, especially for Magnite, it seems to be in line with its peers, and it doesn't seem to be very, very expensive. In terms of technicals, as you can see here, we have the next 12 months total enterprising value divided by revenues, and as you can see here, in February 2021, this metric was around 25, but now it sits around 7.2, so it is under the mean of which is 9.1 for the period between 2020 and between the August 2020 and right now November 2021. But yeah, so the company has had a significant pullback in the last couple of months, and at this time it seems like we have pulled back to a reasonable valuation. And right now I'm gonna go real quick on trading view. So as you can see here, for the daily chart, we have a strong area of support, which is the 24 price, and the price has bounced off it several times, and now it has closed below it after the last earnings session, in which the company said that it's going to continue to have some repercussions from the COVID pandemic going into Q4, and so the price closed below it, and right now it seems like it acted as a resistance, which means that immediately the price hit it, it was rejected, and the price went lower. We have some indecision here, and in a sense, I do expect for the next couple of weeks for the stock to trade between these two lines, the 34 and the 20. The 20 is a old resistance, so it acted as a resistance back in 2016, and as we can see here, 2 times the price hit it and then it got rejected, and now, as you may know, some of those areas where we have an old resistance, it may become a new support. So the 20 price might become a new support, especially since we have the 100 simple moving average on a weekly chart. And yeah, as you can see here, for the last couple of months, we've just been consolidating on a weekly chart, and the trend is also clear on a daily chart. As you can see, we also have this huge bearish trend line that has been going on for a couple of months. And yeah, if you want to open a position, I think you can open a small position and then you can buy more on the 20. Honestly, I'm expecting for the company to come back to this 20 area, and I would be very, very comfortable buying here in the 20. But to be honest, if you expect the company to grow and to get to, let's say, back to the all-time highs in the 60s, it won't matter if you bought at 22 or if you bought at 20. So if you believe in this industry, if you believe that the advertising industry is gonna grow, and especially the connected TV industry, then I think you can comfortably open a position here. But at the same time, please be very careful, because the macroeconomic picture is very important, and if we're gonna have some huge significant movements in the inflation expectations and some other things that are not necessarily related to the company, those might actually trigger a pullback even if the company is performing well. Alright, and to summarize here, Magnite seems to be offering great exposure to the growing advertising industry. The company is very aware of its shortcomings and actively trying to fix those, either organically or via strategic acquisitions, and its objective is to establish itself as the largest independent omnichannel sell-side platform, and so far it looks like they're on the track. They're the biggest revenue on the sell side for independent sell-side platforms, and yeah, remember, always watch the business, the potential catalyst for the business that might affect your investment thesis, and watch the business, don't watch the stock necessarily. More importantly, please remember to always invest in your companies with your desired level of risk. Magnite is still a growing company. As we've seen before, it has the highest growth rate amongst its peers, and so yeah, be very thoughtful of this because it also carries a high degree of risk. Alright guys, thank you very much. That was it from me, and yeah, I will see you next time. Alright guys, welcome back. That was Stockbites number 3. If you feel like you've learned anything of value today, or you want to see more in-depth stock reviews, please consider subscribing. Until next time, keep crushing it.